Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 44, published on November 6, 2020, titled Best ESG Companies and Funds, and More, presented by Investing for the Soul. InvestingfortheSoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stock symbols and bonus material, at this episode's podcast page located at investingforthesoul.com/podcasts. And Google any terms that are unfamiliar to you. To start things off, we have a great new article naming the best ESG companies by Investors Business Daily, abbreviated IBD. The article is titled As ESG Investing Gives 2020 a Sustainable Spin, 50 Best ESG Companies Revealed. It's written by Alan R. Elliott. Here are some quotes from Mr. Elliott. The list highlights 50 stocks that boast both high ESG ratings and superior IBD stock ratings of fundamental and technical strength. These ESG stocks have been especially strong, with the top 3 stocks on IBD's Best ESG Companies list each having a composite rating of 99. In terms of stock performance, at the top of the IBD ESG list, Nvidia has a 12-month gain of 206%. Pool has a 72% advance. Salesforce.com is up nearly 80%. The next 5 stocks on IBD's ESG list average a 12-month gain of almost 70%. Nvidia and Pool are currently on the IBD 50 list of the best growth stocks. Also, see the profiles of Nvidia, Salesforce.com, West Pharmaceutical Services, Adobe, and Best Buy. MSCI ESG Research has ranked companies according to available information pertaining to environmental, social, and governance criteria. Those ratings provide the basis for MSCI's more than 1,500 equity and fixed income ESG indices. The earliest of those, the MSCI KLD 400 Social Index, first launched as the Dominies Social 400 Index in 1990. IBD cross-references MSCI's rankings with its database of all stocks to determine the 50 most ESG advanced companies in the growth stock realm. The MSCI ESG ratings compare companies only to other companies in their industry. A AAA rating means your ESG efforts put your company ahead of industry peers. Also, keep in mind some companies rank high due to social issues such as healthcare, company leave, and diversity policies for their workforce, while they may be less environmentally savvy than a lower-ranked peer. To date, no standardized set of reporting requirements relates specifically to the countless aspects of corporate governance encompassed under the ESG rubric. That makes ranking difficult and more of an art in certain situations than a science. End quotes. Though the title of this next article is 3 renewable energy stocks to buy ahead of the election, The authors say it still makes sense to consider these three stocks after the election too. It's published in the Motley Fool. As usual, I'll mention the stock followed by quotes from the analyst concerning that stock. 1. Travis Hoyam likes Hannon Armstrong Sustainable Infrastructure Capital. Like any company that invests in renewable energy projects, Hannon Armstrong is in the business of generating a yield from its investments. The company can take equity or debt positions in projects, finance efficiency improvements, or even pay for ecological restoration. This means management can shift dollars to where it can get the best return for the risk, rather than being locked into one type of asset class in renewable energy. The result for investors has been impressive since the company went public. Few companies have the ability to adapt and succeed in the current environment like Hannon Armstrong, and investors will be rewarded with not only a great stock, but a 3.1% dividend yield as well. 2. Howard Smith recommends NextEra Energy. NextEra announced its adjusted third quarter earnings per share grew 11% compared to the previous year period. The parent of electric utilities Florida Power and Light and Gulf Power continues to grow its renewable energy generation capacity for those businesses. But its NextEra Energy Resources business is experiencing the strongest growth, with earnings per share up 23%. NextEra's Energy Resources business is the world's largest generator of solar and wind power and has a growing battery storage segment as well. NextEra extended its earnings growth expectations of 6 to 8% off that higher base through 2023. The company also said it continues to expect a 10% annual dividend per share increase through 2022. 3. Jason Hall suggests Atlantica Sustainable Infrastructure. The future of the world's power supply is heavily tied to solar and wind, no matter who's sitting in the Oval Office or roaming the halls of Congress. And few companies are as well positioned to profit from this reality as Atlantica. The company owns, develops, and operates utility-scale wind and solar energy power plants, selling the power on long-term contracts. The result is steady, utility-like cash flows that it can use to fund new projects and return to shareholders in a steadily growing dividend. Atlantica is an international business, meaning that no matter what legislative action is taken in the U.S., its prospects remain very good. At recent prices, Atlantica's dividend yield is over 5.4%, and the prospects for regular dividend growth from here are very strong. Atlantica is a stock worth buying right now, no matter the outcome of the U.S. election. Most ethical and sustainable investors are enamored with passive ETF index funds. However, some see a possible resurgence in actively managed funds too. One company that has brought to market an actively managed ESG fund is U.S. fund manager Vanguard. An article titled, "This ESG fund from Vanguard is off to a good start," describes this product. It's written by David Kathman and appeared on the Morningstar.com site. Here are some of Mr. Kathman's thoughts concerning the fund. Quote, Vanguard Global ESG Select Stock has shown promise so far, but it still has plenty to prove given its short track record. It earns a Morningstar analyst rating of bronze for both its investor and Admiral shares. Vanguard launched this fund in June 2019 as the first actively managed environmental, social and governance fund in its lineup. The fund has looked pretty good so far in its first 16 months of existence. Its returns have beaten the World Large Stock Morningstar category average and the FTSE All-World Index benchmark, and it has earned a Morningstar Sustainable rating of high. That's 5 globes. Expenses are low, as one would expect of Vanguard, which remains a top-notch parent. All this is encouraging, but the fund will need to deliver over a longer time period to earn an analyst rating higher than bronze. The fund held up pretty well in the bear market from February 19th to March 23rd, 2020, when its 30% loss was 2 percentage points less than the category norm and the benchmark. End quotes. In the UK, the FT Advisor just published an article titled Top 10 ESG Funds Named Amid Record Year for Inflows. Some of these funds might be of interest to non-UK residents as well. That's why I've included it. The article is by Imogen 2. Here are the funds with some brief quotes from the article. Royal London Sustainable Leaders Fund was the top performing UK ethical fund over the past decade, almost tripling its investors' cash, according to AJ Bell. Of ethical funds with a 10-year record, Premier Ethical and Lion Trust Sustainable Future UK Growth also performed well, returning 174 and 152% respectively. Incidentally, go to this podcast's page for more of the top funds. Over the same time period, the FTSE All-Share returned 64%, while the FTSE for Good UK saw an average performance of 71%. There have been some funds which have managed to outpace the racy MSCI World Index, however. The Lion Trust Sustainable Future Global Growth Fund tops the performance chart with a return of 267% in 10 years. Again, for more top-performing funds in this category, go to this podcast's page. Mr. Laith Califf, a financial analyst at AJ Bell, said, "Given the extremely strong absolute performance of ethical funds in the global sector, it's difficult to say investors should be disappointed, but technically, as a group, they have underperformed." End quotes. Well, these are my top news stories and their stock and fund tips for this podcast. Best ESG companies, funds, and more. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcast and scroll down to this episode. Also, be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and aware of the sustainable values of your investments. Thank you for listening. Talk to you again on November 20th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon, and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.